Guys, this stock might be one of the easiest ways to grow small portfolios. So while it's down on the day, before it has a pretty big reversal like it did last time at this price, I want to show you what I'm talking about and how much you could expect to make. I've got a good amount of buying power right now because I've been trimming out of my profitable positions. So I am looking at getting some Figma shares to literally do what I'm showing you guys in the video. It's a $17 stock. It's not super expensive. They IPO'd not too long ago. It was a $90 IPO. It pumped all the way up to over 100, well over 100, and it's pulled back since then because of AI fears. Now, Figma has a 93% price target or 93% higher than the current price because their latest earnings look great, but it's really because of the growth metrics for the last few quarters that have been extremely strong to the point where their minimum price target is 28.58%. That would be 3 times the S&P 500, and you're buying into a very, very cheap stock on paper, just according to the numbers that they're putting up. Their revenue has been great. They're keeping a lot of it. It is a consistently profitable company. I think their new paying users are up like 150%. So everything looks great, but let's talk about the money making opportunity here. So we're going to buy 100 shares at 1713, right? So we're putting 1,713 of our own dollars into the stock, and we can expect, according to professional analysts, something like 33 within the next 12 months. So what would that look like? Well, your initial investment of just about $1,700 should be something like $3,300. Obviously, that's huge. That's, amazing compared to what everyone else is making, but let's step it up a notch here. We'll take it up a notch to the point where we could make another 100% or more by selling covered calls on this stock. So once you have those 100 shares, you're going to tap Trade Figma Options. We're going to go a week out, so 7 days out, sell a covered call. So we can sell covered calls for 59. It's because it's a little late in the day. So if you were to do it literally just like half an hour ago when I opened up this chart to make this video, it would have been at around 62. So if you sell a covered call every single week, you're getting $62 a week. That's going to be $3,224. By the way, your initial investment is still only $1,700, right? So we'll add 3,224. Let's do that. 3 and 224. Boom, 6,526.23. So your initial investment of just about $1,700, because of where it's at right now, could be $6,526.23 within 12 months, according to analysts, and if you're able to sell those covered calls every single week. Now, maybe there are some weeks where you don't, or you don't want to, or you get covered called on those shares, of course. Like, what if you actually get called on those shares and you have to, sell them? But we're just taking this from the perspective of what an ideal year should look like. So maybe it'll be less. Maybe it'll be like 5,000 or 5,500, something like that. Either way, it's still an unbelievable growth rate on your money. I think it's extremely worth it, so I'll be doing it myself. Make sure to subscribe if you're not already. I'm going to be posting update videos daily, and join the Discord. We take every trade live.